Hey guys, grade 11 accounting students, welcome. It's such a pleasure to be here with you guys to help you learn more and get absolutely brilliant at accounting. Today guys, we're going to be looking at disposals and acquisition of fixed assets, and we're going to obviously be learning together. So let's get started. Right, now remember, before we actually start with accounting exercises, it's absolutely important that you guys remember some terminology. So I want you, before we start, together with your friends, to look at the following concepts and to give me some kind of definition. What do you remember when it comes to the following terms? Okay, so which terms are we looking at, guys? Right, we're looking at cost price. We're also looking at your selling price, accumulated depreciation. And here, remember, when we talk accumulated depreciation, we're obviously looking at accumulated depreciation on vehicles or accumulated depreciation on equipment. And then the last concept that I want you guys to recap on is the term carrying value, or sometimes called book value. So I'm going to give you guys, let's give you 2 minutes to discuss the concepts, and then I will look at the concepts with you guys. Okay, so your time starts now. Okay, welcome back, guys. Right, let's look at the terminology together. Okay, now remember, these concepts are absolutely important, guys, especially when it comes to asset disposal. Please make sure that you can differentiate between the concepts that I'm about to discuss. So the first key concept, cost price. What do we mean by cost price? So let's look at the definition. This is the original cost price that was paid for the asset which is now being sold, traded in, donated, etc. Okay, so remember guys, cost price, we are talking about the original cost price. What did the business buy the asset for when they obviously purchased this asset? Okay, right, next concept, your selling price. Now the selling price, I'm sure most of you have got this correct already, but let's just go through it. The selling price looks at the amount at which the asset is being sold. So for example, cost price, I bought the asset, let's assume, at an amount of 100,000. But 5 years later, when I sell the asset, my selling price, what am I now selling the asset at? It could be an amount of 20,000. Okay, very, very important. Know the difference between cost price and selling price. Right, the next key concept. Let's just bring this down a bit. Okay, you've come across this before in grade 10, but let's recap on accumulated depreciation. Let's go through it. The total depreciation that has been written off over a period of time on the asset which is being disposed. If the asset is sold during or at the end of the financial year, the accumulated depreciation must be updated. Okay, we're going to talk more about that when we do an example. But for now, what is accumulated depreciation? Every year, when I write off depreciation, over a period of time, that accumulated or that depreciation accumulates, it adds up. So for example, in the first year, I could have written off depreciation of 1,000. In the second year, I could have written off depreciation of 900. The third year, let's assume I'm writing off depreciation of 800. Guys, I'm just making up these figures, so don't get stressed about it. So in total, if I had to ask you, in total, what is my accumulated depreciation? It's obviously these three amounts added up, which should give me an amount of 2,700. Hopefully that is correct and not 3,700. Yeah, it should be 3,000. Let's just fix that. 3,700. Okay, with me. Right, next concept that is vital for you guys to remember, the term carrying value, which is also known as the book value. So let's go through the definition. The book value or the carrying value refers to your cost price less or minus your accumulated depreciation at the date of sale is what we refer to as the carrying value. In other words, what is the actual worth of the asset being sold? Okay, so if I dispose of the asset, yes, I bought the asset at 100,000, but 5 years later, what is the actual worth? What is the carrying value of the asset? So for example, I bought the asset at, let's assume I bought a printer for 1,000 Rand. Over a period of time, I've written off depreciation of 700. So that's my total accumulated depreciation. The carrying value, that printer is now worth 300 Rand. Okay, with me. Okay, right, let's carry on. Next concept. Okay, the next two key concepts, guys, absolutely vital, and I know you didn't get a chance to discuss this, but now's the opportunity for me to discuss these concepts and for you guys to listen very, very carefully. Right, what do we mean by profit on sale of asset? Now, we just spoke about carrying value and we spoke about selling price. So let's look at this concept, profit on sale of asset. If the carrying value at the date of sale is less than the selling price received for the asset, the business then has made a profit on the sale of asset. This is considered to be an income for the business. Okay, so for example, let's assume that the printer that I spoke about previously, the carrying value is 300 Rand. Okay, so that's my carrying value. And I decided to sell the printer for an amount of 500 Rand. Okay, so my selling price amounts to 500 Rand. So clearly you guys can see the selling price 500, but the carrying value, it is worth 300 Rand. So obviously guys, I've made a profit when I sold this printer and the profit would amount to the difference between the selling price and the carrying value, which is an amount of 200 Rand. Okay, with me. Right, let's move on to the next concept, which is the loss on sale of asset. Okay, now I'm sure if you've understood profit on sale of asset, you're probably thinking, but hang on, loss on sale of asset has to be when the opposite happens. So absolutely true. So let's go through the definition and then I'll use an example to explain loss on sale of asset. So if the carrying value at the date of sale is more than the selling price received for the asset, the business has made a loss on sale of asset. With me. This is considered as an expense for the business. Okay, so still with our printer, let's assume the carrying value, okay, is still 300 Rand. So that's what we calculated the carrying value at. And the selling price, when I sold the printer, I'm only receiving an amount of 100 Rand. So I can't sell the printer for more than 100 Rand. That's my selling price. I'm receiving 100 Rand. So in this case, you guys can obviously see the carrying value is greater than the selling price. The worth of that printer, the printer is worth 300 Rand, but I've sold the printer for only 100 Rand. So in this case, I've now made a loss on sale of asset, and once again the loss will be calculated by subtracting the two, and the loss on sale of asset an amount of 200 Rand. Okay, right, let's move on. Hopefully you guys are learning something and you are recapping on these concepts. Right, okay, guys, very, very important what I'm about to discuss, certain steps that needs to be followed when completing asset disposal. Okay, so let's look at these key steps. Okay, the first thing that I want to remind you guys is when recording an asset disposal, please take note of the date of sale. In other words, always identify if the asset was sold at the beginning of the year. Is the asset being sold at the end of the year, or is the asset being sold during the year? Because you're going to find that the steps will change depending on when the asset is sold. And when we talk about, or when we go to step 2, I will explain this further. So for now, I want you guys to bear that in mind. Always remember, when is the asset being sold? Okay, right, let's look at step 1. Step 1 wants me to transfer the cost price, which we spoke about earlier. So transfer meaning I'm taking it out of either vehicles or equipment. So let's assume that's vehicles account. So I'm transferring from my vehicles account the cost price, and I'm transferring it to a new account called asset disposal. So how do I do this? I need to obviously pass a general journal entry, and that general journal entry will be as follows. I'm going to debit asset disposal and I will credit vehicles, or I might credit equipment depending on what I'm selling. Okay, so that is step 1. Right, step 2, guys. You're going to now transfer the accumulated depreciation, very, very important, at the date of sale. So in total, what is your accumulated depreciation at the date of sale of the asset that is being sold, also to this account called asset disposal? So I'm transferring accumulated depreciation and I'm sending it to a T account called asset disposal. And once again, there's a journal entry that needs to be passed. So the journal entry will be as follows. I'm going to debit accumulated depreciation, and this time I'm going to credit asset disposal. Okay, with me. Very, very important. If the asset is sold during or at the end of the year, so you're going to come across this, right? If the asset is sold either at the end of the financial year or somewhere during the financial year, accumulated depreciation must first be updated. Okay, so how do we update accumulated depreciation? You're going to debit depreciation and you are then going to credit accumulated depreciation before you transfer to asset disposal. Okay, with me. Right, the next step, step number 3, we're now going to record the selling price. In other words, the price at which we are selling the asset for. So when we record the selling price, it's all going to depend on the following. If I sell the asset for cash, I'm going to debit bank. Okay, so guys, I'm going to say that one more time. If I sell the asset for cash, I'm going to debit bank. If I sell the asset on credit, I'm going to debit debtor's control. If, let's assume, the owner decides he wants to take the asset for personal use, you're then going to debit drawings. Let's assume he wants to donate the asset to the local high school. You then will debit donations. Or if the asset is being traded in, so in other words, I'm giving in my old to buy a new, I'm going to then debit creditors' control. So the accounts that I've just highlighted, one of the accounts will be debited depending on the nature of sale. Right, that's the account debited. You then going to credit, once again, this account called asset disposal. Okay, right, the final step, guys. Step number 4, it's now time to calculate whether you made a profit or a loss made on the sale of the asset. So I spoke about profit and loss already and how to do the calculation. So let's quickly look at the journal entry. If you've made a profit on sale of asset, you're going to debit asset disposal and you're going to credit profit on sale of asset because it's an income. However, if you've made a loss on sale of asset, you will then debit loss on sale of asset because it's an expense, and you will credit asset disposal. Okay, you guys with me? Right, so I think it's time for another break, and I want you guys to think about the key concepts that we spoke about, discuss the various steps, and when you guys come back, we will then move on to an example. Okay, see you guys now. Hi guys, welcome back. Now before we move on to an example, something has been brought to my attention that I made an adding error. So let's go back to one of the key concepts where I added incorrectly. Right, accumulated depreciation, guys. If we do add up these 3 amounts, we're definitely not getting 3,700, and this amount is 2,700. Okay, so reminding me that even though I'm the teacher, I can make mistakes. And sometimes, you know what, it's good to rely on your calculators because after all, in accounting, your calculator is your best friend. Okay, right, let's now move on to an exercise. Okay, so guys, the activity that we are about to do, remember, I want you to work with me. You've got the information in front of you. You're looking at the screen. You've got your calculators in front of you. So please work with me. Okay, the activity that we are completing today, the following information was extracted from the accounting records of Toby Traders. Balances at the beginning of the year, 1st March 2015, we've got vehicles, 210,000, and another opening balance for accumulated depreciation, an amount of 60,000. Then we're given the following transaction. On the 1st of March 2015, so immediately, guys, and I want you to get into the habit of doing this, especially when it comes to asset disposal, and later on you're going to see even with financial statements. Draw that timeline because it gives you some kind of indication in terms of the financial year that you are working for. And remember, as accounting students, we know that a financial year is not necessarily the calendar year. So the financial year could start in March and then obviously it ends in February. Or if the financial year starts in February, it could could end in January. So it's always nice to have that financial year in front of you somewhere on your answer sheet. So I'm doing just that. So this financial year started on the 1st of March 2015, and then obviously ends on the 28th of Feb 2016. So in terms of the information that I've got, on the 1st of March 2015, the business sold one of its vehicles for 60,000. So immediately, just going to change the color of my pen here, I want to clearly indicate to myself, I'm now working with an asset disposal at the beginning of the financial year. Okay, so let's go back to the information. On the 1st of March 2015, the business sold one of its vehicles for 60,000. So immediately, that 60,000 is my selling price. The vehicle was purchased on the 1st of January 2014 for 120,000. So 120,000 is my cost price. Depreciation is written off at 20% per annum on the cost price method. The money for the sale was transferred into the business's bank account on the date of sale. So clearly, this was a cash sale. Okay, we received the money immediately. Right, let's now look at the question. The first question wants us to calculate the accumulated depreciation as at 1st of March 2015. Okay, right, so immediately, guys, after reading through this adjustment or this transaction, you would have noticed that they haven't given me the accumulated depreciation. However, they are giving me depreciation is written off at 20% per annum at the cost price method, and they're giving me the date of purchase. So in other words, they want me to calculate the depreciation for each year and then add up my total depreciation in order to calculate what was the accumulated depreciation at the date of sale. So let's do that. We now need to go back to the very first financial year when the asset was purchased, and according to this information, it was purchased on the 1st of January 2014. So I know my financial year starts 1st of March, ends on the 28th of February, and I'm obviously now going back to 2014. So the asset was purchased somewhere here on the 1st of January 2014. So immediately I've used the asset for this time frame only. Okay, I've used the asset for 2 months. So let's look at our calculation in terms of the first financial year. So for the first year, okay, when I write off depreciation, remember I need my amount, I need my rate, and I need time, which represents number of months. So amount in this case, the cost price, so when we bought the asset at 120,000. Okay, so that's my amount. Times the rate of depreciation is given to me at 20%. So times 20. And then my time, I've used the asset, or I've owned the asset for only 2 months, so 2 over 12. Okay, you guys with me? Right, let's now take out the calculator so that we can work together. So we've got 120, just pick that up a bit, 120,000. Okay, we're going to multiply this by 20%. Okay, and we're going to multiply it by 2, and then we're going to divide it by 12. And our depreciation amounts to 4,000 Rand. Okay, so let's record that. Depreciation for the first financial year, an amount of 4,000. With me? Okay. Right, let's now look at the second financial year. Okay, so your second financial year, and remember guys, the second financial year now is going to be slightly different, because in the second financial year, okay, which starts again 1st of March, but this time starts 2014 and ends on the 28th of Feb 2015. For the second financial year, remember, I've now used the asset for the entire year. So in terms of my depreciation calculation, it will be as follows. So once again, I need my amount, which is the cost price, 120,000, times my rate, which is 20%. Okay, but this time around, I've owned the asset for the entire year, so 12 over 12, which obviously now cancels out. Right, and once again, I'm going to rely on my calculator. No, it's an easy one, but let's just be safe. So 120,000 times 20%, and that gives us an amount of 24,000. So let's fill that in. 24,000. Okay. Right, now that I've calculated my depreciation for the first year and the second year, remember the question wants me to calculate how much in total was written off by the 1st of March 2015. So in total, all I've got to do now, guys, is add up. So in total, my accumulated depreciation for the 1st of March 2015 will be 28,000. In other words, depreciation for the first year plus depreciation for the second year gives me my accumulated depreciation. Okay, not difficult, but remember, requires a bit of calculation. Show all your calculations. So in the event of part marks, or in the event, of you getting the total incorrect, you can always get some part marks. Okay, right, let's move on to the next question. So the second question wants me to do the following. Okay, wants me to calculate the carrying value of the vehicle that is being sold as at 1st of March 2015. So we spoke about this earlier on. Carrying value is equal to cost price minus accumulated depreciation. Okay, so let's do this calculation together. Your carrying value, cost price minus accumulated depreciation, the cost price 120,000 minus my accumulated depreciation that I calculated in the previous question. So let's just quickly check. It was 28,000. Okay, so I'm transferring that 28,000. So minus 28,000. Okay, and that would now give me the carrying value of this vehicle that is being sold. So again, calculator, let's clear that. So we've got 120,000 minus 28,000. Right, and that gives me this vehicle is now worth 92,000. Okay. Right, remember guys, the word carrying value, what is the worth of the vehicle? So even though I bought the vehicle at 120,000, 2 years later, the vehicle has lost value, it has depreciated, and it's now worth 92,000. Okay, right, third question. I'm hoping that this is going okay thus far, guys, that you are learning. Remember, if you've got any questions, feel free to ask your teacher, and they will help you, or they will explain further. Okay, right, the third question wants me to calculate whether the business made a profit or a loss on sale of asset, and they are telling you that you may draw up an asset disposal account. Now, often in a test or an exam, they will want you to draw up the asset disposal account because, hey, this is accounting and it's all about ledger accounts and financial statements. But remember, guys, and this is what our students often forget, that accounting is also maths. Okay, accounting, we debit and we credit, but by debiting and crediting, we're also adding and subtracting. So sometimes if they are giving you that option of showing a calculation, remember it's much more quicker than actually drawing a ledger account. So I want you guys to bear that in mind. Right, so I'm going to use both methods. I'm going to show you guys both methods, and I want you guys to remember both methods and use either or depending on the question. Right, so calculate whether the business made a profit or a loss on sale of asset. So let's quickly look at the carrying value that we calculated in the previous question. So this vehicle is worth 92,000. So let's write that down. So the carrying value, the actual worth of the vehicle is 92,000. Let's put a rand sign in front. Right, the selling price. Let's now go to the selling price. What did we sell the vehicle at? So if we go back to our information, the business sold one of its vehicles for an amount of 60,000. Okay, so the selling price is 60,000. Okay, so look at this, guys. It's worth 92,000, okay? However, we sold it for 60,000. So immediately we've made a loss, correct? We've now made a loss on sale of asset, and our loss on sale of asset should be 32,000, but we've got 92 there already, so let's subtract the 60,000, and we've made a loss on sale of asset, an amount of 32,000. Okay, so simple, straightforward, guys, really not difficult. Now, in the event of your teacher wanting you to do the asset disposal account, okay, so let's quickly draw up the asset disposal account. Let's look at how we can also calculate this amount of 32,000. So when you draw up the asset disposal account, on the debit side, you are showing the cost price, 120,000, and obviously your details will be vehicles. Okay, I can't write it in full, but you guys know what I'm talking about. Right, on the credit side, we will show our accumulated depreciation, and the accumulated depreciation that we calculated earlier on. Let's just quickly go back to that calculation because I can't remember the amount. So my accumulated depreciation was 28,000. So let's fill that in. Okay, so accumulated depreciation, an amount of 28,000. Right, the selling price, it was sold for cash. Remember, the money was deposited or transferred into the business's bank account. So the contra account, so the other account affected in the general ledger is bank, and the selling price, an amount of 60,000. Okay, so when we now work out whether we made a profit or a loss on sale of asset, okay, remember, in terms of your ledger accounts, if you credit asset disposal, you've made a loss. If you debit asset disposal, you've made a profit. So in this case, we've obviously made a loss, but let's just show you guys quickly. So on the debit side, I've got 120,000. So 120,000 minus, on the credit side, I've got 28,000 minus another 60,000. So on the credit side, there should be an amount of 32,000. And remember, guys, this is my loss on sale of asset. Okay, and by recording the loss and sale of asset, remember the debit side will equal to the credit side. Okay, right, we're done with our first exercise. What I want you guys now to do, and I'm going to give you 3 minutes to do this because it's really, really quick, and I want you to actually work on your own. I don't want you to do this with your friends. So I want you guys to do the following question, and let's give you 3 minutes and let's see how far you get. Okay, see you now. Okay, right guys, time's up. However, because I'm feeling very, very generous, I'm gonna have, let's have another ad break so you can spend maybe another few minutes on this question to finish up. Okay, so let's take a short ad break. Hey guys, welcome back. Okay, let's now look at the question that you guys were busy completing, and I'm hoping that you are going to get everything correct when we mark this together. So let's get started. The following information was taken from the accounting records of Seasway Stores. The owner of Seasway Stores decided to sell their old printer on the 1st of March 2016 to one of its employees for an amount of 500 Rand. The printer costed 3,000 Rand and the accumulated depreciation amounted to 1,800 Rand at the date of sale. So in terms of this question, they want us to simply complete the asset disposal account below. Okay, so in terms of, let's quickly go back to what they've given us. So they've given us the cost price, they've given us the accumulated depreciation, and very, very important, it's at the date of sale, so there's no calculation for us. And they also gave us the selling price. So all we're doing, guys, is taking the amounts that they've given us and we're putting it into this ledger account. So the first step, we transfer the cost price to asset disposal. And remember, asset disposal gets debited. So on the debit side of this account, the cost price, 3,000 Rand. Okay, there would have been an entry in the general journal. The other account affected would have been not vehicles, let's just erase that. Okay, selling a printer, so the other account affected will be equipment. Right, this sale is taking place on the 1st of March 2016. Okay, so I've recorded my cost price. Now let's go to accumulated depreciation. So my accumulated depreciation at the date of sale amounted to 1,800. So on the credit side of this account, 1,800. Once again, general journal entry would have been made. The other account affected will be accumulated depreciation on equipment. Okay, I know it's a lot to write out, guys, but remember, your teachers often do allow you to abbreviate to a certain extent, but always check whether, in this case, this is how I've abbreviated, always check whether this abbreviation is acceptable because it's quite a bit to fit in this little column. Right, and the date, 1st of March 2016. So I've now recorded my accumulated depreciation. I've completed step 2. Step 3, I need to record the selling price. So the asset was sold to one of the employees, but they simply said that it was sold. Okay, they're not telling you it was sold for cash, money was received immediately. So immediately, guys, you assume that it was sold on credit if they're only using the word sold. So it was sold for an amount of 500 Rand. Again, general journal entry would have been passed, and the other account affected, because you haven't received payment as yet, so the other account affected will be debtors control. This person is still owing the business 500 Rand with me. Right, now that I've recorded my cost price, I've recorded my accumulated depreciation, I've recorded my selling price, I'm now able to calculate whether we've made a profit or a loss on sale of asset. So let's get the calculator out. Okay, you guys should be very, very comfortable with this. Let's just leave this here. Right, so my cost price, 3,000 minus accumulated depreciation, 1,800. And this printer is worth 1,200, is that right? Yeah, it should be. Right, so this printer is worth 1,200, but we sold the printer for 500 Rand. Okay, so immediately carrying value 1,200, but that selling price is 500. Okay, so you're probably thinking, what has the owner done? Why is he selling it for so less? It's worth 1,200. So unfortunately for him, he's made a loss on sale of asset, and that loss on sale of asset should be 700 Rand. Okay, so loss on sale of asset gets recorded on the credit side of asset disposal, 700, general journal, loss on sale of asset. Okay, right, at this stage, your asset disposal account automatically now closes off because the debit side is exactly the same as the credit side. You don't have to, remember, you never balance an asset disposal account. The purpose of an asset disposal account is to work out whether the business has made a profit or a loss on sale of asset. Okay, so I'm hoping, guys, that you got this correct, you got your details correct, you got your amounts correct. And remember, when you complete a ledger account, often we find students leave out dates. Okay, don't do that, guys, because now you're losing out on marks. Make sure you fill in dates as well. Right, now let's start with the next example. We don't have much time, but let's see how far we go in terms of this particular exercise. Right, the next activity, the balances below were extracted from the accounting records of shady suppliers. Their financial year ends on the 30th of June 2015. So immediately when you read through this information, plot the financial year ends on the 30th of June 2015, which means it started on the 1st of July 2014. Right, what are we given? We are given vehicles on the 1st of July 2014, an opening balance of 300, accumulated depreciation on vehicles, in brackets, I'm just going to write the date as well. It's also on the 1st of July 2014, and the opening balance 120,000. Okay, the transaction that we're given on the 1st of January 2015. So immediately, let's go back to that timeline. 1st of January is obviously somewhere here in the middle. So on the 1st of January 2015, the business decided to trade in one of its vehicles. Okay, so I've got an asset disposal during the year. Right, trade in one of its vehicles for 55,000. Now remember, guys, trading, I'm giving in my old in order to buy a new. So we've got a disposal and we've got a new asset that has been purchased at the same time. The vehicle originally costed 100,000, so this is obviously the vehicle that we're disposing, and the accumulated depreciation amounted to 40,000 on the 1st of July 2014. The new vehicle costed 130,000, so let's highlight that in a different color. The new vehicle costed 130,000, and then they're giving me information about depreciation is written off at 10% per annum on the cost price method. Right, what is required for me to do? Okay, they want me to complete the tangible asset note. Okay, now remember, guys, often students ask, but ma'am, why do we really have to do the tangible asset note? Is it necessary if we have ledger accounts? The reason behind that, guys, is because there are a number of non-accounting people out there. Believe it or not, certain people just don't do accounting. So because of this reason, we've got to prepare something that they can read. So remember, not everyone understands debits and credits like you and I. So we've got to present our ledger account in a different format. Hence the reason for the tangible asset note. It's more user-friendly, it's more easier to read. Okay, so please remember that. The tangible asset note is your ledger account in a different format. So if we look at this note, we start off with carrying value at the beginning of the year. And remember, your T account always starts off with an opening balance, yes or no? Okay, it does, isn't it? So this happens, or this tells us what happened at the beginning of the year. Then your T account, after you bring down your opening balance, you then look at what happened during the year in your ledger account. So similarly in the note, Movements simply means what happened during the financial year. Were there additions? Were there disposal? There's obviously depreciation at the end of the year. So this part of your note simply means what happened during the financial year. And then finally, your tangible asset note also looks at end of the financial year. End of the financial year, back to your ledger account. You always balance your account at the end of the year. You've got a closing balance. So similarly, this particular note then focuses on the end of the year. So can you see this T account, not T account, sorry, but this note is simply your T account in a different format. Okay, just remember that. Right, we're not going to have time to do this entire exercise. So the only thing that we can do, guys, is fill in the cost at the beginning of the year, accumulated depreciation at the beginning of the year. So let's try to do that quickly. My cost at the beginning of the year, 300,000. So let's fill that in. And my accumulated depreciation at the beginning of the year, 120,000. So let's fill that in. Okay. Cost minus accumulated depreciation gives me my carrying value at the beginning of the year. So my carrying value, 300,000 minus 120. I'm just skipping the 3 zeros because it's not necessary. And that gives me 180,000. Okay. Right, guys, unfortunately, we don't have enough time to do the entire question, but I know you've got a brilliant teacher that's sitting with you and watching this lesson, and I'm sure he or she will be able to assist you with the rest of the question. Before I leave, I want to quickly remind you, yes, it's a new year, it's the start of a new year. Make yourself a promise that you're going to do your accounting homework. Whenever you give an accounting homework, promise yourself that you're going to do your accounting homework, because remember, by doing your accounting homework, you're obviously practicing, and by practicing, you are helping yourself. Okay, until we meet again, from me, Mehesh Lal, goodbye, God bless, and I can't wait to see you next week. Bye-bye.